This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. On today's show, K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen, have a domestic and international grain market discussion in the first two segments. They first talk about wheat, transportation, and the U.S. dollar. In their second segment, Daniel and Guy converse about corn, grain sorghum, and soybeans for both the United States market and worldwide market. Chip Redmond, K-State meteorologist, wraps today's show with his weather update where he explains our expected wet conditions and average temperatures. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you very much, Shelby.
Today, wanting to look at some market reactions we had from reports we saw a week ago. And Daniel, starting off with wheat, what are we seeing domestically?
Well, not a lot of bullishness in the market at this time. That we came out of that report and had seen the USDA come forward with an increase in the yield per acre for the U.S. And again, this is following after the September small grain summary report. So more evidence had come in from USDA NASS, National Ag Statistics Service, and led them to increase yields. Small change in acreage, up from 36.6 up to 37.2. So a little bit higher yield, a little bit more acreage, harvested acreage, and ended up and raised production about 58 million bushels. Nothing much else changed in the supply and demand balance sheet for U.S. wheat, with, again, exports still at 900 million bushels. And ending stocks did increase from 844 by 57 million up to 901. The price projected by the USDA down about a dime from $5.10 to $5. Stocks to use at a 41% in the September report. Over 2 months' time, basically accumulated evidence to put us up closer to about 43.9%. So not a lot positive. Saw no changes though in export figures for hard red winter wheat or for hard red spring. Hard red still at 325 million. And it's interesting to see some of the U.S. export figures as some of that as we recover from the government shutdown and see the USDA handle their data through time. And now they're up to October the 2nd, basically advanced 2 weeks from that last report that they had on the 18th of September. And even with that, you've got hard red winter wheat running it in the last report that we had about 11.3 million bushels, needed about little over 5 to meet the USDA's projection of 325 million bushels. So again, we'll be playing catch up from now until basically the first of the year in terms of that data. My question that I had with the government shutdown and this data that was going to be released was whether, again, the primary one had to do with whether we could maintain a pretty strong pace of U.S. wheat exports overall and hard red in particular. And it looks like, at least so far with what the evidence is that we've seen, that we've maintained that. I would say Guy, kind of just a couple comments that on the world's stocks to use for wheat, saw really no changes in stocks to use that are tremendous importance. You did see, so 2 years ago, the 23-24 marketing year, world stocks 34%, 32% at 24-25, and now this one that we're in, projected in November at 33, and world less China up at about 21%. So really look at the last 3 marketing years, no major changes, nothing to shake things up. So I guess the overall supply demand landscape in aggregate hasn't changed much. Guy, what about some of the specifics?
Yeah, we did tighten the ending stocks up a little bit, but look, the trade was expecting it to be a bit more tighter. So because it missed the trade expectation, it was basically a bearish report. Looking at the world wheat production number, 25-26 production, world production was pegged at just under 829 million metric tons. That's up actually 12.7 million tons from September and up 3.5% from a year ago. And as I sort of run through these countries, they're all slightly bigger number. The Australia crop increased 1.5 million tons to 36 million metric tons compared to 34.1 a year ago. Argentina was up 2.5 million tons from 2 months ago to 22. It was 18.5 last year. Russia production was up 86.5 million metric tons, up 1.5 million. Exports, though, were actually lowered for Russia, 1 million tons to 44. Ukraine production left unchanged. European production increased 2.2 million tons to 142.3. Canadian production was up 1 million tons at 37 versus just under 36 in September. China was steady at 140 million metric tons, and imports were left unchanged on that. So just bigger general production numbers around the world is really what's hanging on this wheat market. And all those numbers were above what the trade expectations were.
When we're thinking about trade, Guy, how has transportation and the U.S. dollar been looking?
Well, to start with the U.S. dollar, since 2 months ago, we've seen the U.S. dollar index rally from about 97.5 up to just above 100 on the index. When the currency shows a bit of strength like that, that does weigh on U.S. commodity prices and its competitiveness around the world. Switching over to transportation, just on domestic transportation, we have seen barge freight break a bit, which sort of indicates harvest is pretty much over through the Corn Belt, particularly across the river states. We do continue to see a record corn export program, which is keeping it firm, but it has come down off those harvest highs. And that tells me most of this crop is now put away, and with the carries on the boards, probably sitting in pretty tight hands in the country elevators. Similarly, rail freight has broke as well on the UP rail lines. Rail cars are bid option price with maybe a 200 offer, and the BN still a bit of a premium there, but it's below 1,000. It's bid about 500, offered about 600 per car. So rail freight's coming down. Internationally, on the dry bulk, we've seen dry bulk index come up to an 18-month high. A lot of that, I think, is being driven not so much by grains, but we're seeing China buy a bit more iron ore and coal. Coal and iron ore account for about 2/3 of the volume in that dry bulk index, which grain has to compete with that in order to get transportation. So that's what we're seeing from a logistical side of things.
There is something else that happened during this time frame of the break from the government shutdown, and that's again the U.S. and China negotiations came to an end. Generally positive news with the hope of more exports for U.S. soybeans and hopefully for grain sorghum as well. Guy, in my quarters, I've been watching the numbers. We've had some movement there, not a lot. The basis hasn't changed a lot, although I do see a few cash price bids now, just one or two in South Central Kansas, the key export terminals. You'll see bids jump 20, 30 cents above companion elevators around the area. So that's a sign of some potential movement coming in. Any thoughts that you'd have on that before we go to a break, Guy?
Well, just on China particularly, it was good to see them come to a more friendly arrangement there. They're still waiting for some of the details. We have seen China buy some soybeans, but not as much as maybe we were hoping. Wheat purchases have been lacking, and the corn purchase has been disappointing there as well. We have seen a little bit of corn shipments and a little bit of sorghum there as well. So hopefully we'll work through that. So we'll see. I think the market wants to see the actual sales, but also they want to see the grain actually be shipped. So we'll see how that comes about.
In past conversations, Daniel, we've talked a lot about are farmers choosing to store their grain or sell their grain, and did we see any changes with this report?
And really, that follows, Guy, just what you talked about. A lot of grain in pretty tight hands. I think there's an aspect of psychology involved and financial need when we've been through recent hard price lows. And since we're talking about wheat, wheat futures had gotten down as low as, well, in late October, about 475 thereabouts, jumped up to 540, now dropped on Thursday down to 506 for a close. That's hard Redmond wheat, the Dees contract. So in a situation like that, we tend to see people, after having had at least a moderate high and falling off of that, then when you get a rise afterwards, you're more inclined to probably sell. But that only happens for those that have and coming up end of the year cash flow needs. They want to make sure they move some grain. So you get human psychology coming into play, and basically you get it starts to impact the movement of grain out of storage. Anything that was put in commercial storage, of course, tends to move quicker just because of the higher cost of doing it. On-farm storage can tend to be just as you mentioned, more bulletproof, tied in, locked down for the long-term wait, looking out into spring of next year, unless there's a big surprise that could come. Guy, any comments on that?
Yeah, no, I think you're right there, Dan. I think the farmers have got it put away. They probably got everything sold they need to cash flow themselves through Christmas holiday, and they're probably going on vacation between Thanksgiving and Christmas, I'd say. Country elevator, I would say most of those guys have their hedges rolled out to May or even July. Again, it's going to be in pretty tight hands, and they're going to have to see a basis a move in that to shake that loose. So it should be a better year for the country elevator than we've seen for a while, which is good. But it's just wait and see. If we see the export programs continue, particularly on corn, that's where I think we'll see it happen first.
Guy, when you say export programs, what do you mean?
Well, we watch the export lineup every week on how many ships are presenting themselves to load. We watch the volume of grain in the export pipeline, particularly along the river. And that export program, they need to match up. And we'll talk about this after the break, is corn exports have been at record levels. So that's a good note.
That was the senior economist at the IGP Institute, Guy Allen, and he was joined by K-State grain economist Daniel O'Brien. We're cutting to a short break, but when we come back, we'll once again be joined by Guy and Daniel as we continue our grain market conversation. You're tuned back into Agriculture Today, and we continue our grain market conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. As we do continue talking, we covered wheat and transportation in our last segment, so leading us on into feed grains, Daniel, what are we seeing?
The story coming out of that WASD and the accompanying crop production report had to do largely, I think, with the U.S. yield. There were pre-report trade expectations of like 183.5 bushels per acre or 184, depending on who you talk to. This number came in at 186, even down 0.7 of a bushel. Still, I guess that we've come now from the September report, skipped the October, went to the November report for corn, and the market was bearish. I guess more pessimistic on yields than the USDA came out with. So I guess, Guy, this is an issue of kicking the can down the road again. And the survey that we did on November 1 was happening during the shutdown. And what a challenging situation. So still, I think you can bang the drum too much on uncertainty. I think what we have right now is what the markets could trade on. I don't think people are waiting with bated breath for the final January numbers to come. However, I guess I would say there's still just because of the way the information out of the USDA has played out this year, when it's been available and when not, still some uncertainty and surprises that could come into the market in the January annual crop production summary and the accompanying reports. Other than that, but by the time we got we had taken that information in on actual U.S. yields, we had seen the projected crop still at 16.75 billion bushels. It was 16.8 something in the September report. Yes, 16.814. So basically down about 62 million bushels. The USDA did probably a bigger issue than the production figure was that they had raised the ending stocks from last year that represented where we stood on August 31st by over 200 million bushels. So since the ending stocks from last year higher, the beginning stocks higher by the same amount, and you've got two factors, both record large crop and increasing stocks, both coming in and just plowing a bunch of corn going forward into this marketing year. Haven't seen a lot of changes. Really, the only changes that we'd seen on the usage side were that feed residual usage was raised 144 million. That was supply. Total supply is 18.3 million. feed residual unchanged, pardon me, but then the export figure raised 100 million bushels. And Guy, that ties in with the comment you'd had in the last section that we've got this strong pace of exports going forward. And really, even though the USDA is catching up, you see for the data we have heading off into October, during that break, we continued to see purchases going forward. The USDA did raise the price for U.S. Season average price from $3.90 to $4 by a dime, so a small amount, but it says something about underlying usage and demand. Probably a fair amount of that export strength. Stocks used from 13.1 to 13.3%, and really on grain sorghum, no change. What's waited for on the grain sorghum is whether and to what degree China is such a predominant buyer in that market, whether they'll come back in and start to move sorghum. Hasn't happened yet, although the last set of numbers I'd seen for this information in early October was showing some activity coming in, a little bit more than we had been seeing. But I would not be surprised. I guess I'll just be really curious, Guy, to see where during that break, if there were buyers that were quietly coming in and buying grain sorghums because it was so cheap during that time frame. Guy, I guess I'll throw it over to you on the international side for anything you see on the feed grains.
Yeah, look, the numbers for both corn and sorghum were pretty much unchanged domestically, which surprised me a bit. They did raise the exports 100 million bushels, which is a bit optimistic. Look, we're on pace for a record export program this year of 78.1 million metric tons, which look, that's a real strong number that they have in there. So as long as we keep up the pace, that'll be good. And as that continues, that should lend some support to prices. On the sorghum situation, there has been reported some smaller sales to Mexico. Really haven't seen China in there at all. We really need them to come in, but I think that those Mexico purchases, they have the same economics we do here in the U.S. Sorghum's pricing itself both into the feed rations and the feedlots and poultry as well as into the ethanol grind. Looking at the global situation for coarse grain, ending stocks pretty much unchanged from September, but down 10 million metric tons from last year. International or non-U.S. stocks are expected to drop by 26 million metric tons. 18 of that is in a drop in China. China's production, I think, is a bit better this year than what we've anticipated. Argentina's old crop or ending stocks are down. They also expected non-U.S. wheat feeding to increase by 3.3 million metric tons. I think that's reflective of the cheap value of wheat and that it's being fed in a lot of countries there as well. Particularly, that'll start with the lower quality stuff on that. So, look, the good thing is we're seeing a strong export market, and that lends itself to, I think, the strong demand from the feed sector, particularly. And people continue to eat beef, pork, your animal proteins. And I continue to be pleasant surprised to see that strong feed demand and livestock demand across the board.
And moving on to our last commodity to talk about today, soybeans. Domestically, Daniel, what are we seeing?
Well, domestically, we're seeing a tremendous run up in prices. Anymore when we see something positive in the markets, given the kind of the harvest time frame that we're in, we react to it with surprise. Have seen prices in the last several days jump up to about 1170 or so, and that follows from the USDA in their balance sheet projections on the 14th, November 14th. They'd raised the price projection by 50 cents from $10 to $10.50 for this marketing year. So, most of the time they're just shaving around the edges. I will give you 5-10 cents here and there. They're raising 50 cents. So there's something happening. I just would say on the domestic balance sheet for soybeans, it's really kind of quietly been one piece of pretty positive news that's happened coming out of that report. It hasn't been talked about a lot, but the USDA did lower the U.S. average projection of yield by half a bushel from 53.5 down to 53, still record high. But that led to a decline of about just under 50 million bushels. You bring that through the balance sheet. Crush was unchanged. By the way, crush still remains tremendous relative to the last 3 years, 2.555 billion bushels. We were at 2.4.5 last year, 2.3 the year before. And so that's a positive quiet mode. But crush sure outpacing the export figures. The USDA did drop the projection of exports down to by about the same amount as they dropped the crop. by 50 million bushels, 1.635 billion. By the time they worked all the way through, ended up and dropped ending stocks by 10,290 million, basically back where we were about in August. And then again, and the stocks use actually, against a quiet deal guy, but 2 years ago, 23-24 market year, we were at 8.3% stocks to use, 7.1 last year, now down to 6.7. So it's certainly not a barn fire tremendous market, but it's something worth looking at. And guys, as you go off into on the international side, just wanted to make a statement that it's interesting to look at world less China ending stocks. So 2 years ago, 23-24 marketing year, 27.4% stocks to use. Again, about the same last year. And this year had seen it's at about 26 thereabouts. So whereas tightening up a little bit on the domestic side, on the international side, we're still holding in there decently, but yet prices are going higher. Guy, any thoughts on that?
Yeah, not a lot to add on the soybeans. Just a few comments in there. Talking about China, USDA has a near record import for them this year at 112 million metric tons. That may be a bit optimistic. It's good to see that trend in China continues to move upward. My initial thought a year or two ago, with the population starting to level out and drop, that the soybean demand would do the same, but it continues to move upward on that. Talk a bit about our competitors down in Brazil. When I looked at the supply-demand balance sheet for Brazil about August, I figured they had about enough carryover soybeans to run out about Thanksgiving or Christmas. We've seen the Chinese start to come in and buy some soybeans. If my balance sheet numbers are correct, they're going to have to fulfill that demand, I'd say, if not by the end of the year, by January, there at least to meet that initial purchase commitment that they made. The interesting thing on the pricing, 4 months ago, China was buying soybeans pretty much exclusively from Brazil, and they were paying $1.50 a bushel premium to the U.S. soybeans, CNF China. Today, the situation's kind of reversed. They're actually paying $1 a bushel for U.S. soybeans above Brazilian soybeans today. If the Brazilians were running out, you would have thought they would have done that by pricing their beans higher. So I scratch my head a bit, as the Chinese just don't seem to be acting in an economically rational business fashion on that. So I think politics is driving that market more so than an economically rational grain trader on that.
Daniel, Guy, I appreciate you both taking the time to join us today.
Shelby, thank you very much. Take care.
That was K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with a weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, we have been seeing drier conditions. However, is that changing as we look ahead?
Yeah, November's definitely been quite dry. When we look statewide, pretty much everyone is gone about 23-ish days without measurable rainfall over 1/10 of an inch. And we're getting into that dry time of year where we just don't average a lot of rainfall. And so we can build streaks like this. In fact, we go back and look at some of the longest precipitation-free streaks. Obviously, Southwest Kansas holds the record for that. But most of them started right about that November, December timeframe and end later into winter or early spring. So granted, we're not going to get to that point. We are ending over the last 24 hours or so. We have ended for most of the state the precipitation-free period with ongoing rain and thunderstorms. Some folks remarking about the lightning and how vigorous it was and bright it was. Been a couple months since we had lightning. Kind of forgot what it looks like. But a good measurable rain statewide. Some folks seeing in excess of 1/2 to an inch of rain. Southeast Kansas potentially going to end up with multiple inches of rain by the time all is said and done. And this is the first of a pretty substantial pattern change where we've had high pressure over the course of the month dominating the central and eastern U.S. and really just quiet weather overall. We had cooler weather, then we got warm, but overall quiet precipitation-wise. But the West has been active. The West has seen multiple storm systems impact it, and that jet stream shifted far enough south now that now it's getting into California and southwestern United States. Sierra Nevada has had multiple feet of snow over the course of the last week, and that's that pattern change where we're shifting that jet stream further south. So as we get these big systems in the southwest, they impact us, and now we're finally able to get this Gulf moisture northward. We've had a lot of fog on the last few days, and that's that Gulf moisture moving north and providing us this ability to get precipitation out of the sky and hopefully really fill the soil profile up as we go into winter.
While we're talking about precipitation, focus towards rain right now, but when will that switch to snow?
Yeah, so we're gonna go into a pattern here where we're gonna have another storm system early next week, the week of Thanksgiving, that's gonna bring more rain and more widespread rain, heavy rain to the same areas, but a little bit more situated eastward in Kansas, at least. The same areas I'm thinking the heaviest rainfall totals of this current event are still in the Mississippi Valley. That's also going to be the focus for this next event. We will have some rain in southeast Kansas, not quite to the magnitude that we saw with this most recent system, but it's still all rain. We don't really have any cold air to work with these systems, but that's going to change on the back end of that storm early next week. We're going to see cold air swing down across the plains and into the eastern part of the United States. And by cold, I mean seasonably cold. We're supposed to be around 50 degrees for our high and around 30 degrees for our low. And we've been 10 plus degrees above that really for the last couple of weeks. So we're going to have more seasonable temperatures, but unfortunately not enough cold to get snow yet, which is probably good for folks traveling. But I am starting to watch as we get to Thanksgiving. It looks like the weather will be pretty quiet on Thanksgiving itself. There will be snow in the northern plains and parts of the Rockies to the west. So if you're traveling there, be aware and watch that forecast. But a little bit colder air, it looks like it's going to work in with the next system that's going to be after Thanksgiving that weekend there into December. And there might be just enough of that combination of moisture with that cooler air that we could see some snow. I'm not very excited about a large accumulating snow by any means. We're going to need the pattern to shift a little bit, and that potentially might happen early December. We're watching that polar Arctic jet stream. It's likely to dip southward here through the early December, and that might open the door for perhaps more snow than maybe rain as we go through the month of December.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you today on Agriculture Today, but we'll be back with more for you on Monday.